Bloomberg Audio Studios.
Podcasts, radio, news.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow in San Francisco. Caroline Hyde's off today. This is Bloomberg Technology. Coming up, SpaceX weighing a tender offer that would value the company at $200 billion. Details ahead. Plus a Bloomberg scoop. Alphabet and Meta in talks with Hollywood studios to use their content for AI video generation. And Canva takes on Adobe users with work tools to speed up its growth. Let's get a quick check-in on the markets. Lots of green on the screen. Happy Friday. What a nice way to end the week. You're looking at the NASDAQ 100, a tech-heavy index, the SOX or Philadelphia Semiconductor Index, both rebounding, moving higher after UMich inflation expectations data made us feel a bit better that the world would be comfortable with rate cuts. Both of those indices have the ability to close at fresh record highs, yields going nowhere. We're going to talk about Ether throughout the program. It's down in the session 1 percentage point, $3,712, but it's on track to have its best week in a year. Lots to discuss with the potential of spot Ether ETFs with Bloomberg's Shonali Basak. Let's go to the private markets. Bloomberg is reporting that SpaceX is considering a tender offer that would value the company at $200 billion. A tender offer is where the company allows staff, employees, and some early investors to sell the shares that they already own, existing shares, to outside investors. The price is set by Elon Musk and the CFO, and it's agreed with basically a lead outside investor. And what we're hearing, according to one source, is that that price could be $108 to $110. So you do the math, and that would be a jump in valuation to $200 billion. That's a pretty big number. Let's talk about it with Bloomberg's Max Chafkin, member of the Elon Inc. podcast team, storied columnist at Bloomberg Business Week covering technology, and someone that's covered Elon Musk companies closely. The main point for me, irrespective of the mechanics, is simple. SpaceX's valuation keeps going up.
Yeah, absolutely. I think the last number we had heard, the last private valuation we'd heard was $180 billion. So, this is a pretty sizable jump. It's also a reflection. Look, this is a fairly mature company and it's private. So if you need to be able to find a way, Elon Musk needs to find a way to give employees and some of these venture capitalists who may need to get out or want to get out a method to do that. And of course, as you said, Ed, because SpaceX has so much dominance in the launch market, it's not hard to find other investors willing to take over these shares and take them over, at a premium.
You've documented throughout your career, like the early days of SpaceX, things were very hard, financially precarious. But now SpaceX basically dominates the industry for sending payload, human and inorganic, from Earth into orbit. Just summarize where they are in this industry.
Yeah, so thanks to this they have a long collaboration with NASA, and I think NASA deserves a lot of credit here for essentially backing SpaceX with early contracts. But they are now, as you said, the way that the U.S. sends people and supplies up to the International Space Station. That's a very lucrative business. There is a possibility the U.S. would like to get another source. Boeing is working on its own systems there. So it's not like there's no competition, but when you take a few steps back and look at just the volume of launches worldwide, SpaceX is dominating. It's sending up a very large percentage, and with the expansion of Starlink, which is Elon Musk's sort of satellite internet platform, that's created this additional demand for launches, this additional traffic that is coming, on top of these very very substantial government contracts.
Max, I just want to share Elon Musk's post on X again with our audience. So we published the story, and as so often is the case, a user on X took a screen grab of the article, and this was Musk's response. SpaceX has no need for additional capital and will actually be buying back shares. We do liquidity rounds for employees and investors every 6 months approximately. My take on that is that he's basically confirming the Bloomberg reporting. And the main point that we make in the story is that in a tender, they don't issue any new shares anyway, and they don't gain any proceeds from the sale. It's a transaction between the employees and the would-be buyers.
Yeah, I read it the same way. Every now and then you have a tender offer that could come with some additional funding. And I think part of the reason he probably chimed in is just to clarify that, no, this is not an effort to raise capital. This is just an effort to allow employees, early investors, whoever, to exit their shares. Now, you do wonder, is Elon Musk going to be among the shareholders? Obviously, he's the world's richest man, but he still owns a huge amount of SpaceX, and it would be interesting to see if he were somebody who would unload shares, although I don't think we have any indication that is going to happen, but that's something that I'm going to keep my eyes on as this story develops.
I did write to him and I did ask him, so Elon Musk, if you're watching, please reply to my email. Max, Starship, attempt number 4, test number 4, as early as June 5th. That could move, but just based on how successful Starship Test 3 was, set the scene for us of what a Starship Test 4 might look like in your mind.
So I think it's important to keep in mind they haven't made it to into an orbit yet, but they have made it into space. And I think it's just important to keep in mind that this is going to be a long process, right? Like, this is a totally new spacecraft. We've seen the previous launches end, in sort of fireballs, but ending in a fireball is not necessarily a failure for this aircraft, right? They are still in development mode. This is not, this is a situation where things are going to progress slowly, because ultimately here the goal is to have a functional, reusable, and much, much larger spacecraft than has ever been, than has ever flown, that Elon Musk believes could be useful to send missions to Mars. There's so many what ifs there, despite the fact that this is using technology that SpaceX has been developing over a long period of time. The size is different, the scale is different, and then there are questions about what exactly do you do with this in the interim, because I don't think we're going to have a Mars colony in the next couple of years, and Elon Musk is going to want to find something to send into space to fill up these giant rockets.
Starship Test 4 as soon as June 5th. But if it happens on that date, we'll see. Bloomberg's Max Chafkin. What a way to end the week. Thank you very much. Sticking in the world of Elon Musk, his artificial intelligence startup xAI is slated to complete a funding round in June that could value the company at more than $24 billion, which includes its latest influx of cash. That's according to a source. The source also said the final close still hasn't happened in the deal, but the company's getting closer to its $6.5 billion target in terms of the raise over the next few weeks. Canva just unveiled its biggest redesign in more than a decade at its Canva Create event in Los Angeles yesterday, with new workplace products like Canva Enterprise, a new subscription to meet growing demand and adoption by larger organizations. There's a lot more in there as well. And let's bring in Cameron Adams, who's the Chief Product Officer, one of the co-founders of Canva. I've used Canva on and off as an individual creator over the last decade, basically, but it's a significant redesign. And I wanted to get right to what prompted that, why you felt this was like time for Canva 2.0.
Yeah, it's great to hear that you've used it, Ed. Over the last few years, we've seen more and more people bringing Canva into the workplace and using it with their teams and across their enterprise. And we thought now is the perfect time to give Canva a bit of a glow up, to make sure that the interface and the user experience really matched what people were doing in the workplace. And it also coincided with the launch of our new Canva Enterprise package, which is really a product offering designed for large organizations where thousands, tens of thousands of people are using Canva. and giving people like CIOs and IT teams the tools that they need to roll out Canva at scale for multiple teams within their organization, for the thousands of folks that are using it, and be able to give each of them a customized experience.
You know, it's one of these situations where like Canva is like this global startup, and you blink and it's grown so quickly. 185 million monthly users. You're hitting like more than $2 billion in revenue. But I want to go a layer deeper than that. You know, you talk about enterprise. Do you have a clear split in what is basically an individual consumer user base and enterprise base?
Part of Canva's growth over the last 10 years has been our passionate community, and they take Canva themselves from using it in their personal lives or their side hustle. They often take it into their workplace, and there'll be one person using it and then spread it through their team. Maybe it's their marketing team, maybe it's their sales team, and it just grows and grows and grows. And we see this rampant growth in so many companies now, where we've got Canva used in 90% of the Fortune 500. And in a lot of those places, literally thousands of people are using Canva. And Canva Enterprise is a way for that company to then consolidate that usage, make sure that all of their IP is on the same platform, that they're all paying through the right channels, and that those teams can work and collaborate with one another.
Okay, I go on the Canva website. I'm just going to lay this out from a very simple perspective. And I look at all the things that are offering, from docs, social media and video creation, projects. You guys are gunning for and taking on Adobe, right? That is what you're trying to do here.
Ever since day one, we've identified this white space in the market that no one was really looking at. Between productivity and creativity, there's an intersection there that is really interesting, and it's obviously resonated with people. We've got 185 million people that use the platform now, and we continue to grow like crazy. So we've really proved out this next generation of visual content creation that needs to happen for all types of folks, from marketing to sales to HR to creatives. And we're continuing to see amazing growth. So people are obviously resonating with what we're putting out.
Cameron, you are the Chief Product Officer, and we've talked about the redesign, we've talked about the offering, but you're also one of the co-founders. So let's talk about what happens next for Canva. You are growing, you're a richly valued startup. Do you go in the IPO direction? Or Figma was not able to merge with Adobe. Do you look at the M&A direction? Where's your head at?
We don't have much to share yet on IPO. We actually recently did a secondary for our staff, and it was one of the most subscribed secondaries in history, which was a real vote of confidence from existing investors who wanted to reinvest. And we also brought on a whole suite of high-profile new investors. So we're happy with where we're at the moment, and definitely do not want to get acquired by anyone.
All right, Cameron Adams, Chief Product Officer and one of the co-founders of Canva. Really appreciate the update. It's been interesting to track your company's growth. Come back and see us soon. I just want to correct something that was part of a discussion we had earlier with Max Chafkin. We were talking about Starship and Starship 4. The test is going to happen as soon as June 5th, according to SpaceX. But something Max said, he said that Starship 3 had not reached orbital velocity. Actually, in that test, Starship 3 from March, Starship did reach orbital velocity. So I just want to correct that thing that Max said, but we'll get back to that launch later in June. Coming up on the program, here's what we're going to be talking about on Bloomberg Technology. A lot of crypto discussion and a lot in the world of startups. Stick with us. This is Bloomberg Technology. Okay, it's time for Talking Tech, and first up, Source Code Capital is raising one of China's largest VC funds with a target of $300 million. That's according to sources who say the fund goal is preliminary and could change. Source Code Capital was one of ByteDance's earliest backers, and if successful, will mark its first major investment vehicle since early 2021. Plus, TikTok is making it easier for content creators to make money. Although unofficially announced, users have noticed the threshold to join its affiliates program dropped from 5,000 to just 1,000 followers. Affiliates can post videos promoting products sold through the TikTok shop and collect commissions on those sales. The latest move could help bring in users and bolster opposition to a US law that would force parent company ByteDance to sell the app or face being banned. And finally, OpenAI is releasing past employees from a non-disparagement clause that tied together their exit contracts and equity awards. Workers raised concerns after a Vox report last week on the clause that would allow OpenAI to claw back stock if employees spoke out against the company. OpenAI issued an apology for the contract and says it would remove the language from exit paperwork going forward. And a top story on Bloomberg, Alphabet and Meta have held discussions with major Hollywood studios about licensing content for use in the tech giant's AI video generation software. That's according to sources. Let's bring in Bloomberg's Lucas Shaw, who leads our screen time coverage and broke that story. So that's interesting because these are some sizable deals we're talking about. Who's involved and who's involved in the conversation?
I mean, the way to think about it is there are conversations happening between anyone with, a big AI video model. So that's OpenAI with Sora, it's Alphabet, it's Meta, and Hollywood companies. Much as you're seeing conversations between, the large language models more related to text and news organizations, you're going to expect to see that on the video side with film and television studios. The difference is that while we've seen some news organizations broker deals with AI companies, and we've also seen lawsuits, and on the music side, we've also seen some deal making and some lawsuits. The video side is a little less mature at the moment. There are a lot of conversations happening. People describe them as sort of wide-ranging and parts of sort of larger business development conversations between some of these big tech companies and big media companies. But you've seen media companies show sort of different willingness. It seems like Warner Brothers Discovery may be a little more open to doing deals than, say, a Disney or a Netflix.
I feel like the AI industry is doing laps of Hollywood right now. Like you reported in March, OpenAI were over in having very similar conversations. Who's kind of got the upper hand? Like, is it the sellers of the content that are in a position of power here?
Well, it's a subject of some debate, right? On the one hand, you could argue that the people who have the AI models have the upper hand because they tend to believe that using a lot of this stuff can be fair use, and there's some who believe that they've sort of already scraped a lot of information that Hollywood companies have, for example. On the other hand, there's going to be a big debate over who ultimately controls things. There may even be a debate between the studio and the talent, right? There's some kerfuffle this week involving Scarlett Johansson and OpenAI. And I've seen some credible people argue that right now, companies like a Disney or Warner Brothers Discovery have a decent amount of leverage because they have something that these companies want. And so they might as well try to extract the most favorable terms while the AI models are still very nascent and not that powerful.
Bloomberg's Lucas Shaw with another important piece of reporting on screen time. Thank you. Let's get to another big story in the world of Bloomberg Technology. Intuit shares slid by the most in more than a year after the company reported losing 1 million customers who use its TurboTax service for free, stoking concerns about demand for the software. Joining us, Bloomberg's Brody Ford. And part of the problem here is that a lot of what's on offer you can find somewhere else for free in some cases.
Yeah, I mean, what's so surprising here is a big part of Intuit's valuation is this idea that once you use it, it's rare to stop using it because you get all your data in there. It becomes very easy. It'll import previous year's information. I mean, I've certainly used TurboTax the last couple of years because it's very easy. But yeah, seeing 1 million free users leave, that makes investors say, hold up, what's going on at the low end of this market here? And yeah, part of it is that there are other places that you can get this. I mean, one example is that the federal government had a pilot program this year where about 150,000 people used it and they could get a similar service for free.
I did something highly unusual this year. I was a TurboTax user. And I did something that no one's doing. I hired a human being and engaged with a human being to do my taxes for me, like the anti-AI play. The point there is that there are other things that Intuit does, right? It's not just TurboTax. They're trying to be like a one-stop shop for financial data or tools. Is that enough to keep them going?
Well, that was the total dynamic that we saw in the earnings this year. You were certainly in these results that people liked these high-touch, assisted methods that in some ways replaces your local tax store. So at the high end of the market, that the Ed Ludlows, they actually were doing very well. But for people who are saying like, I don't need this CPA, I'm not doing this, they're the ones who might have churned over to, your tax slayers or all these sites that look a little fishy, but probably work, fairly well.
Yeah, I should maybe no comment on the complexity of human versus website taxes. Hey, just real quick, you probably heard a minute ago that we had Cameron from Canva on, and just the last thing he said, we don't want to be acquired. Kind of thought that was interesting. What do you make of it?
Yeah, I mean, it's not a total, because you think about who would acquire Canva. It would have to be a massive company, probably with some creative overlap. It's a pretty small universe of companies. Call it Microsoft, Adobe. We saw what happened when Adobe tried to acquire Figma. They weren't allowed to do it. I would be very, very shocked if some of these M&A lawyers said that they thought they could get a Canva acquisition through with anybody who had the money to buy them.
Bloomberg's Brady Ford. Always love having you on the program. Happy Friday. Thank you so much. Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco. We're feeling good this Friday. We're ending the week on a high in the equity markets. Let's get to the NASDAQ 100. The NASDAQ 100 is kind of my go-to tech-heavy index. It's trading at a record high. But I guess as we end the week, we're also on track for the 5th straight week of gains, which is, wait for it, the longest streak of weekly gains going back to February. So the story this week has very much been about NVIDIA propping up the market, frankly, following its blockbuster earnings. Some other names moved to the downside, but we had that kind of softer secondary data this morning, consumer inflation expectations that made us think that maybe rate cuts will happen at some point this year. After all, who knows? The other big story of the week, of course, is what's happening in the world of crypto markets. I want to go to my dear friend, Bloomberg Sonali Basak, over in New York, who's going to tell me all about Ether. Hello.
We're going to talk about it, Ed, because, of course, it has been a week of whiplash. And let's see how far we've come before we talk about the implications here on what it would mean for the SEC to formally approve a spot Ether ETF. If you take a look here, this is Bitcoin on the screen, and you do have it trading now over 68,000. But what did it take to get there? Not only did we have earlier this year the approval of those spot ETFs, and remember there was a significant run-up into Bitcoin into that time, we had tremendous inflows into those ETFs after they were launched, and you saw even more of a run-up. And remember, though, in that time, we also had the halvening, where there was more interest in Bitcoin. And of course, though, you still see it kind of plateauing since then. And so you do have to wonder how much has been baked in, how much more will be flowing in now that the initial exuberance is out of the way. We are trading below the highs of over 70,000, closer to 74,000 nearly, that we hit back in February, and really leveling off here under that $70,000 mark. Now let's flip up the board here, because Ethereum has had similar gains. You've seen it rise actually more on a percentage basis this year so far than you've seen of Bitcoin. You have seen, of course, almost a 63% rise in Ethereum to date, but a very similar trajectory as you look at this chart. It tracks pretty closely, and more recently, a lot of excitement into that Ethereum approval of that spot ETF into more recent days that have brought you back closer to 3,700. Now, I want to talk about this a little more because this is a lesser known asset to the wider public than, say, Bitcoin is. Of course, Bitcoin you think of as digital gold. So then what narrative does Ethereum take on, and can it get the same public kind of excitement as Bitcoin had in an ETF wrapper? Now, Ethereum, as you talk to guests moving forward, it has a lot of use cases. There are a lot of people building on Ethereum, but it's more native than Bitcoin in the sense that people who are familiar with cryptocurrency will understand Ether more closely perhaps than the broader public. So creating that narrative into the ETFs is another big question. Flipping up the board one more time here, there's another big player that I want to talk about, and that is Coinbase. Because, of course, when it came to Coinbase, this, again, where Bitcoin trading, all cryptocurrency assets came to play, a lot of people were worried about what it would mean to have those ETFs for Coinbase, yet you see Coinbase has surged ever since. And there are a few reasons for that. One being that people have been active in cryptocurrency trading markets. Another reason being that they have been custodians to a lot of the ETFs that have launched. But a third reason that I would give you, and into the Ethereum ETFs, Ed, that a lot of people are watching closely, is Coinbase has this thing that they call Base. And on Base, you are building layer 2s on Ethereum. So the use case for Ethereum over the next couple of years can be fascinating. Coupled with that ETF, let's see how it all goes.
I'm all about the Base. Bloomberg Technology Basek. Happy Friday.
Happy Friday.
Perfect setup. Joining us now is Kavita Gupta, Delta Blockchain Fund General Partner. And actually, I think that was the perfect setup to the perfect guest around this. Just real quick, something that Shonali said, if Bitcoin is the digital gold, then Ether is what in your mind?
It's a digital oil. And that's what's going to run.
Digital oil. Okay, extrapolate. Give me more on that.
So think of it, Ed, like you have gold, which is as a saving currency, which you use. But think about how oil is running everything. It was always supposed to be a gas, ETH as a gas to run products on top of Ethereum. And that set up Ethereum as a technology layer. And if you want to build, as you just talked about Base and said you love Base, anything which is working on Polygon, working on Optimism, building on Base, ultimately all those layer 2 at the end settles on ETH and on Ethereum, and then use the currency ETH as the gas price, which is the oil. So it's basically you can create as many cars as possible. You need to have the same fuel, which is Ethereum out there.
There's basically like three things you have to untangle. There's like the live market action or pricing on Bitcoin or in this case Ether, right? And then in the middle is the underlying technology, which we'll debate. And then the third is trying to track the relationship with the two. And I think like when I think about Shonali's chart, the lead up to spot Bitcoin ETF approval, Bitcoin hit new records, right? Ethereum, which we're showing right now, has had an astonishing run-up in recent days and weeks. It almost caught people by surprise, but I think you would make the point that it hasn't hit its record yet.
No. I mean, I have gone on the record at Bloomberg before and have said that I do not expect ETF to be approved this year. And even a week back, if you would have asked me, I would have said, no, I don't think so. I think it has been a very big political push because of the election year. And somewhere you have to say the Republican candidate being so pro-crypto have made Democrats to really pay attention to it, that suddenly out of the blue, we have a very hushed, unprepared ETF approval. We're still waiting for the trading to happen, but the market expectations in last 2 days got built in, but it's not really there. We have not crossed 4K. ETH all-time high prices were 4.4. So I feel like combination of unexpectations, combination of liquidity crunch in the traditional market. At the end of the day, the trade fire because of the global circumstances, high inflation prices, high interest rates, really there's not much more liquidity. And also the markets didn't close, the trade fire markets didn't close very well yesterday. So I think the combination of all that stuff has also dampened the liquidity on Ethereum.
Kavita, we write often that the Ethereum blockchain is the most widely commercially used. Why is that important?
I think it's the developers network, right? You can have multiple companies making the same product. But if one company is very reliable, Ethereum has been one of the first ones. It is actually the first. It has been reliable since then. It hasn't broken. It has got congested once or twice because of NFTs or meme coins, and it has really survived very well and got back. You have the biggest developer community. You have the biggest security, most DeFi protocols, which has multi-billion-dollar asset under management built on Ethereum has not really got hacked from the Ethereum network side. There could be a Web2 crack out there, but not from the Ethereum side. So I think it is more about the trust, and not only the trust based on which is the best network to build, but what has really relied over time to give you the result. And I think that's why Ethereum has continued to prosper. And also the decentralization, which is very, people usually don't talk about it, but Ethereum Foundation role to stay away, just build the product and let people use it the way they want to use it, which we don't see too much in other layer ones and layer twos, is basically an ideal way to go about it.
Kavita Gupta, thank you. Happy Friday, Delta Blockchain Fund General Partner. And I wonder if that takes off like Ethereum or Ether, the digital oil, to Bitcoin's digital gold. We'll see. Let's talk about it on the social medias. Coming up on the program, we're going to be joined by Zoom founder and CEO Rita Narayan about how she's disrupting the student transportation industry. I was crunching the numbers with Bloomberg's Marguerite Gallerini about the scale of US school district buses. This is one that you don't want to miss. Everything EV next. This is Bloomberg Technology. Okay, let's get plugged in. It will be the first all-electric bus fleet serving a major US school district. Starting this coming August, Silicon Valley startup Zoom will provide 74 electric buses to the Oakland School District, and the buses will also supply 2.1 gigawatt hours of electricity to the Bay Area power grid, which is enough energy for around 300 to 400 homes. Zoom CEO and founder Rita Narayan joins me here on set. This is a really interesting development. In fact, a lot of our audience will be probably surprised that it's taken to this point to have the first school district all-electric fleet. Just explain the deal that you've done with Oakland.
Thank you, Ed, for having me. I'm excited to be here. So electric school bus is having a moment right now. Oakland Unified will be the first major school district in the country to be 100% electric. And we have enabled this by a few things. First, there is a tremendous support of the grants, including the Clean School Bus Initiative Act and the local level grants that are available in accelerating the energy transition. And the second thing very unique about this is that all 74 buses are enabled with bidirectional charging, plugged into our V2G platform, can supply energy back to the grid when these buses are not used for transportation, which is typically in the evenings and summer, which is also a peak demand of energy. So it is pretty amazing, given the Oakland community is really affected by the poor quality of air and the asthma rates. This is a tremendous opportunity.
We were just looking at the scale of where Zoom operates around the country. This morning, the team were also kind of crunching the numbers on how far there still is to go. So when you think about US school districts, I make it that there's about 500,000 school buses, across the country, and many of them still run on diesel. So if that's true, you've got a long way to go to electrify. How is that pace going to play from here?
Yeah, absolutely. Zoom actually today is in 14 states, serving 4,000 plus schools across the country and expanding nationally quite rapidly. So the fundamental foundation and playbook that we have developed in Oakland using our V2G technology and the entire playbook for electrifying the buses and working with all the partners in the ecosystem can be now extended and be available to all the other districts. Typically, people were doing just one or two pilots or deployments at very low scale. With this kind of a deployment now, the news is very positive for the other districts across the nation.
Where does the money come from to electrify school fleets?
So you'll be surprised to know that electric school buses are still 2 to 3 times more expensive than the diesel buses.
Wow.
And that is one of the reasons that the adoption has not been so much faster. And Zoom has been able to do this deployment at scale because of multiple reasons. One is there are tremendous support available from the federal and state grants that is enabling us to reduce the cost of the buses. And second is electric school bus is actually the largest is battery on wheels. It is 4 to 6 times Tesla battery with a very predictable local commute pattern, and it's not used for transportation in the peak demand of energy. There's no other asset which has such a unique pattern, and this allows us to give energy back to the grid and reduce the price of the bus and bring it at par with diesel buses.
Zoom CEO and founder Ratu Narayan, great to have you on the show. Thank you. Let's move from buses to drones. IdeaForge Technology is one of India's largest drone companies and is now eyeing the US market too. Listen to this.
Ankit Mehta is a bit rusty at assembling drones, though he's been doing it for 2 decades now. First as a young IIT engineer, and now as the co-founder and CEO of IdeaForge Technology, India's largest public-listed drone maker. Over 2/3 of this drone is made in India, most of it by Mehta's company, while some key elements like battery cells, propellers and motors are still imported.
Down from making the autopilot, which is the brains of the drone, the entire software, the hardware design, everything is us. We make the ground control software. We make our own payloads, which are the various sensors that are being used for ensuring that the customer can get their intelligence in terms of outcome or the mapping data, etc.
In this suburban Mumbai facility, IdeaForge manufactures over 3,000 drones a year that it sells mostly to Indian government entities for mapping, surveillance and other defense-related work. Government support to the local drone industry includes innovation grants and production incentives. Drone imports are banned and exports are slowly being liberalized in an effort to make India a major commercial and defense drone hub by the year 2030.
There is government as market maker and therefore, one of the largest customers in this business. Without this support, would the Indian drone industry be able to stand on its own?
Government as a market maker is not a choice.
Correct.
It is an imperative because for anything to do with governance, security, or monitoring of large assets, land, it's all government. What policies will do is unlock certain private sectors and segments even more aggressively when we look at delivery as a use case, which can be a very large private use, logistics. Then we look at inspections as a use case. That's again a very large private use.
India's drone market and manufacturers lag far, far behind China, home to DJI, the world's biggest drone company. But nowadays, Chinese drones are less welcome in the US, which is the world's largest drone market. Mehta was in the US earlier this year, scouting for customers.
I think it's a great opportunity for companies from India to explore that market opportunity, and I think particularly for us because some of the offerings that we have adequate differentiated flavor as far as the use cases are concerned. For example, public safety. On a daily basis, we are enabling our public safety users to use the systems in a manner that they can effectively manage situations on ground.
Like police and riots.
Police, riots, traffic,
crowd control, rally control, all of that.
Both local and export market opportunities need to expand rapidly for India's drone industry to take off. IdeaForge's notable Make in India success offers a runway for the over 300 drone companies in the country, from small players supplying hobbyists to large conglomerates like the Adani Group pitching for big defense contracts.
Memorial Day weekend is upon us here in the United States, and one startup is offering an alternative to traditional vacation with daycations, offering the opportunity to rent out amenities at resorts without having to stay overnight. Joining us is the CEO of Resort Pass, Michael Wolf, who previously served as the COO of ClassPass, and that's an interesting backstory we'll get to. Tell me about the size of this market, right? Like a digital marketplace for daycations.
Yeah, well, thanks for having me, Ed. We enable day access to the luxury hospitality industry. So you're not staying overnight at the hotel, but you can use all the amenities. Things like pools, cabanas, all the amenities you've always wanted to use, but just for the day. So we've sent over 3 million people to hotels already, and we're just getting started.
I am a religious membership points guy, right, at hotel chains, specific airlines. A lot of that has interoperability with my credit card. Do you see those people as competition?
No, we see them as partners. We actually already work with some of the top major credit card companies, and we're speaking to a lot of our hotel partners about integrating into their loyalty programs. So we work with all of the top hotels. We just announced a large partnership with Hilton, the second largest hospitality company in the world. We work with Ritz-Carlton, Marriott, Hyatt, all of the major flags, and we are expanding those relationships every single day.
Explain the technology to me. How are you booking sales or revenue on each transaction?
Yeah, so we are both the consumer app and website that you go to find these incredible local vacation experiences, but we're also the entire B2B technology stack. So when you go check in, let's say at the Ritz-Carlton in Bell Harbor, they're using our technology to check you in, set inventory, set pricing, look at competitive data. We've invented the entire category from the consumer side all the way to the business side.
Let's take Memorial Day as an example. Of course, Memorial Day in the US, honoring our fallen men and women of the armed services. But when you have a holiday weekend like this, is there a big spike for you on the app and the website?
Yeah, absolutely. People want to experience local luxury without traveling. So right now, for example, this summer, we're expecting 3 times as many people to want to travel within 100 miles than internationally. So our business absolutely spikes on weekends like Memorial Day and July 4th, where we'll send tens and tens of thousands of people to over 1,500 local hotels.
Michael, if there is a fancy resort or hotel out there that's skeptical, they don't want to do business with you, tell them why they should. Tell them why the daycation really works.
Yeah, the reason why it works is that they're already allowing guests from the local community into their hotels every single day. They might be at their bar or at their restaurant or maybe even their spa. And this is no different. It's just monetizing another piece of the hotel. It's really around the revenue maximization and yield management that hotels are so smart about in their room product, but they've never done it in the rest of the spaces of the hotel. And Resort Pass enables them to generate that ancillary revenue. And this is why we've been able to work with truly the top luxury flags in the world, like Four Seasons, Ritz-Carlton, Auberge, Fairmont, and we're just getting started.
Michael Wolf, Resort Pass CEO. The daycation, it's a new one. Have a great Memorial Day. Thank you for joining us here on the program. That does it for this edition of Bloomberg Technology. It's been a pretty astonishing week. NVIDIA was the mainstay of that week. But we continued. A lot more to check out, a lot more to recap. Really grateful to all of you that are listening to the podcast on a daily basis, and so many of you giving great feedback about it too. Find it on Apple, Spotify, iHeart, and of course on all the Bloomberg platforms. For the final time this week from San Francisco, this is Bloomberg Technology.